Good morning, traders. Welcome to Wednesday live stream with tradinganalysis.com. I'm Todd Gordon, founder. Happy St. Patrick's Day. Let's see. We have a busy market here. A lot of tech volatility again. Before we get into it, my kids, I got to post a video up. They unsuccessfully caught the leprechaun that was prancing around the house and left green toilet water in there and some Lucky Charms scattered on the floor. But other than that, we have a key Fed meeting coming up here. It's all about inflation again, and this move up in interest rates, which has just been pretty persistent. So we'll see how Jerome Powell handles it. He's going to be anything but hawkish, and hawkish means, guys, that would be a policymaker in favor of increasing interest rates or making the monetary policy tighter. He's seeing that the uptrend here over the last 4 to 5 months has really been sort of nothing like it was over the last couple of years. And, that's got to be the stimulus, the fiscal stimulus coming down. And we just passed another 1.9 trillion. So we got to see, is that money going to go into the economy, or is it going to go into Bitcoin and GameStop? And it's a legitimate question. I think, how about the leprechaun too? I think this is going to be the caption in the video that I put out there. Instead of leaving gold coins for the kids, maybe you can start leaving Bitcoins. But this move up is really, we've got Nasdaq futures down again. So I just want to show you the yields quickly. Just talk about, this move up in yields. And again, move up in yields is move down in bond prices. It's really important as equity investors that you understand that. And there's, the macro flows, the global macro flows. That's the interaction between the four major asset classes: equities, fixed income, commodities, and currencies is really, really important. And it ebbs and flows in terms of how important it is. When it matters, it really, really matters. And sometimes when things are quiet, rates are low, commodities are not doing much, currencies, which are related to interest rates, are just kind of doing nothing. Sometimes equities can just go up on their own with low interest rates because there's no alternative to make any money in the fixed income market. But when the macro market, the macro models and the macro dynamics change, it really, really is important, and it impacts equities. And there's a great book, if you guys haven't read it, if you want to get a better understanding of this, which is John Murphy's Intramarket Analysis book. It's a blue book. It's somewhere around here. I redesigned my whole office that I've talked about over the years that really does a great job of explaining that. And I'll go into that in one sec. I think I alluded, you guys, we did pull off last Friday. I broke down my entire office. And in the basement over there, through my wife's surprise 40th, we actually pulled it off. We had about 35 people here. Nobody's reported COVID. Was not a super spreader event. It's all of our friends. We all hang out a lot of the time in really two separate groups. So I think the risk was low. We had it catered and bartender and DJ, and oh man, it was a party. Trish was really, really happy. But anyways, so I've redone the office here. Everything's kind of in chaos right now, getting all my charts set up. I have a new computer. Bennett is going to release. I could ask him when he bring the TA team in here. Bennett built me a new, unbelievable computer, which is really important when you're running all these software programs and stuff to run live streams and charts and this and that. You don't need as I said, you don't need a strong computer to be an investor. You need one to run an investing and trading business. So anyways, so back to all that, interest rates are moving up. Global macro relationships are really important here. And we're starting to press levels that are becoming quite concerning. So what Powell says today is really going to be important. He's going to really try to take a dovish stance, which is the opposite of hawkish. Dovish means a policy that is in favor of supportive, low rates, liquidity coming into the system, trying to boost activity, because he can certainly see that the move up in rates is really starting to spook equity markets. And I also can't help but think, what is Biden going to say? I think his first press conference is next week on the 25th. I think that's right. So is he going to mention anything? And if Trump was in office, he would be all over this, threatening Jerome Powell's life. But he's been very, very quiet. I'm sure he's taken a very different stance. So no interaction there. So let's just go over here, take a look at the, let's take a look at yields. Let me just move this. Okay. So I'll take the chart, Bennett. Thanks very much. So this is just a blank chart of yields. This is from 1998. This is the 10-year yield. And this is the most important U.S. Treasury yield that filters through the rest of the economy. It sets borrowing rates for credit cards and car loans, and most importantly, the 30-year mortgage rate, which is now ticking up. So the first thing that we were thinking, and I've shown you guys this chart a couple of times, is this has been a very visible, everyone knows, anyone who's ever picked up a technical analysis book can see this. You've got a pair of lows here at about 1.4. You've got a pretty good low there in July of 16 and 1.4 again. And we even tried it a third time in August of 2019. We broke through heading into COVID. And then actually it was interesting. The low there was, it was March actually. Actually, no, it was February. Interesting. February made a low in yields and rates before we started to move up. And equity markets made a low in March. So actually a little bit of a divergence there, which is common. Oftentimes when there is good move in yields, it will lead equity markets. So we're coming back, and we did not hold the area that was formerly support broken now is resistance. So it's a little concerning. It really is. So, this is, let's get that. So depending on what kind of retracement settings you're using, we're coming up on a 50% retracement of the move from 3.2 down to 0.38. Okay, these decimals are off by 1. I know Terry wants me to fix these, which you can. But 50% retracement is at 1.823. So that's going to be certainly interesting to see what happens there with yields. Now, I want to bring Bennett in. I want to cut my opening comments and the rest of the team short because if we don't hold, if even Jerome Powell can't talk down rates, this sell-off in technology, which we're down 1.05%, it looks like the rut and the S&P have gotten worse as we're heading into the open year. If Jerome Powell can't calm these nerves, then we need to look at possibly resistance levels in the Nasdaq. And this is something that I did twice over the last 3 weeks, which is put in index option hedges. And we did this with the Nasdaq. The first one I did successfully. And what the idea is I want to keep our tech exposure in our portfolios, but if we can utilize options to hedge on the downside, it saves us from exiting our tech positions, realizing gains, possibly short-term gains, and then having to get back in. And the one thing that I've seen is it's over the years is it's okay to get out of a trade or get out of an investment if you think a downturn is coming. But what I've seen is, let's say the market sells off, somebody's like, okay, I'm going to get out here. The hardest part of re-entering your stock positions is getting back in at a better price compared to where you sold. Usually what happens is if you sell, you ride it down. Okay, you're like, thank God I didn't ride it down. And then by the time it comes back, you're like, oh God, here we go. And then you wind up paying up here. That happens so often unless you're incredibly disciplined. So it's easier to hedge with options. We did it twice over the last month in this NASDAQ sell-off. One was really, really successful. I risked about $4,000 and made about 30,000. Of course, I drew down about 100,000. I did it again. That was a loss of about 11,000 for me. So it's fine. I'm still up on the hedge. And I think based on Bennett's work here in the indexes, we might look to do it again. So I do want to save some time and show you how I would set up an index option hedge if these rates are going to move up, if the Nasdaq's into resistance, and we want to protect in the downside. Okay, so let's bring in the TA team. And while we're doing that, guys, if you don't mind, hit that little thumbs up button on the YouTube window if you don't mind. Happy St. Patrick's Day, and good morning, guys. How you doing?
Good morning, Todd.
Good morning, Todd.
Hey, guys. Are you guys awake?
Yeah.
All right, you guys go back to sleep.
Just too focused on yields this morning, you know?
chat lively group we have this
Oh,
morning.
I'm sorry. I had my microphone muted. Sorry.
Okay.
I was going to say Happy St. Patty's Day. Yeah. There. Lucky Charms on the floor.
Yeah.
I hadn't heard about that one. That's a new one.
These kids, man, I tell you what, like, I'm not a helicopter parent, but when I grew up, and Terry, your kids are a little older, man, we didn't have 3/4 of the crap these kids have now. It's unbelievable. I feel like we're all raising our kids with kid gloves on and putting them in this fairy tale world. Anyone else want to jump on that one?
They don't. They're not even impressed when every time a rocket launches, I want to go sit and watch it because it's so awesome. And the kids are like, back on their phone.
They could just watch the point of view feed live on YouTube, you know?
Yeah, well, they don't care.
You know,
Man on the Moon, oh yeah.
I have to say, Terry, the kids, like, we're going to Florida here. I haven't told you guys this in 2 weeks for a week. The kids are really asking to go to Cape Canaveral. My boys are actually into that, so I'm holding out hope. So yeah, and again, I can't wait to trade SpaceX stock. Cannot wait. So anyways, Bennett, why don't you hop in a little, actually it's about time to take us into the indexes and show us what the possibility is you think if we are up against resistance, if you don't mind.
Absolutely, let's do it. Good morning once again, YouTube. Thank you guys for tuning in. Do apologize for getting started a few minutes late. I've got an interesting day ahead of us. Obviously, the Fed meeting this afternoon is of interest. Had a little bit weaker than anticipated retail sales report. Yesterday's move in the market was certainly a little bit concerning. If you look at the market internals, we did have some concentrated selling. So let's jump in, hard right edge, using the Motive Wave platform, and take a look at the market through the lens of the Elliott Wave theory. And what we're looking at here, last week, let me back up. Last week, I mentioned that we had seen a pretty significant retracement of the decline in the S&P. However, the Nasdaq, which really led the market off the COVID March lows from last year, was still trading under resistance. And if I take you over to the Nasdaq chart, let's take a look at the daily. You can see here on the daily chart, coming out of the October 30th lows, we had a nice 5-wave rally coming into parallel channel resistance. We anticipated that corrective pullback. The Nasdaq had a beautiful 3-wave measured move to the downside. And when we found support out of that 3-wave move and started to move back to the upside, the fact that we were still trading under resistance was a little bit of a concern. And what we identified was kind of like a key level, a retracement level that I wanted to see broken to kind of help substantiate the resumption of the uptrend. Even with a break through that resistance level, which let me show you that now. I'm going to drop the typical yellow circle on there so you guys, for context, can see where we're going on the charts. Down to the 1-hour chart, you can see that yellow circle now highlighting the price action. We were looking at a retracement of this decline, and what we had was a move into about a 50% retracement, had some consolidation. Yesterday's move took us into about a 61% retracement, and now we are starting to back off. I am seeing this advance off the lows as potentially impulsive. However, we are nearing what could very likely be the completion of this 5-wave trend. If we do hold support out of the open and start to move higher, which based on futures action this morning is a little bit questionable, we could entertain one final push up into this zone. However, alternatively, and how I was actually looking at this move initially with our members, was a triangle completion here in the wave 4 position. This triangle completion, now based on the pullback from yesterday's highs, could entertain the idea that the wave 5 actually ended right there into that 61% retracement. And what that would do is that would complete an initial 5-wave advance off of the March 5th low and set us up for some sort of a corrective pullback. In the event the corrective pullback does not find support, we could entertain the idea that the larger wave 2 is actually in play, and that would look a little more something like this. We would have the initial move off the top kind of forced into a 5-wave trend, which is why this is not my preferred interpretation. It's a backup in case we don't hold support on our primary count. But in the event that we don't hold support and fade lower, this alternate in tech, in the NDX, as well as the XLK, this alternate is also valid for the Sector Spider ETF XLK. this would give us a further move lower in the Nasdaq. But for the time being, I'm still operating under the assumption that this is the resumption of the uptrend, and the corrective pullback will present a viable entry opportunity. Taking a look at the S&P, you can see here we've had a much more significant retracement in that we've actually established a new high now. And very similar to the Nasdaq, if for some reason we were to kind of open up near yesterday's lows and start to catch a bid, we could entertain one final subdivision here to the upside prior to some sort of a corrective pullback setting in. But just like the Nasdaq, we could also entertain the idea that this was a three-wave move here, kind of a sideways three-wave move in 4, and that was your wave 5 top. So I think the move that follows is going to be very telling and help kind of establish where we're going with the higher degree trend in the indexes. One of the market internals that we were watching was the put-call ratio, and we were looking for classic divergence of market sentiment. We had that, as you know, back into the COVID February 2020 highs. We did get a pretty significant divergence here of the put-call ratio, or in this case, the call-put ratio as it's inverted, and this is as reflected by its 9-day simple moving average. However, we've got this lower kind of support trend line, which trend lines obviously can be subjective, that is attempting to hold. And we are starting to tick back to the upside. So very focused on what transpires following today's Fed meeting and where this corrective pullback takes us. Over to yields, the 10-year yield, we were looking at a wave count, 2 wave counts, one that suggested 1.6, 1.7% resistance, which could give us some sort of a C wave and a flat. But alternatively, and as we were actually looking at last night with our members, if you take a look at the move here in the 10-year and just kind of back out, I'm going to take you to a 1-hour chart. We're going to go back to the August of 2020 low. And that was just off of the March 2020 low. So you have this move up in 1, ABC, 3-wave correction into a 78.6% retracement. That took the 10-year down to 0.5%. And then you can count a kind of a leading contracting move, which resulted in a sideways 3-wave correction. And then you have another impulsive move, followed by another 3-wave correction, right to a 61% retracement. And from there, that's where you see the more vertical ascent unfold, which is kind of traditional of a 3rd wave position. Obviously, counting Elliott wave in Treasuries can be a little bit difficult. And as we have seen here, the 3rd wave, we've exceeded the 161% relationship of this 3rd wave compared to 1. We're now up into 200%. And if we zoom into this green 3rd wave, you've got a nice move up in 1. You've got 5 smaller waves in 1, a little 3-wave pullback in 2. Here's your acceleration gap occurring in 1/3 of a third. The orange 3rd wave was 200%. Orange wave 4 was 38% retracement. And then we've got this contracting move unfolding. Notice the contraction at play here. So if we hold resistance up into the 1.7 to 1.75%, we could get a pullback in the 10-year, but obviously today's Fed meeting is going to be very kind of critical to how that unfolds. Obviously not anticipating a rate change, going to be focused primarily on the press conference. One of the charts that I'm watching in the event that the markets do continue to catch a bid is that of Amazon. Amazon's been in sideways consolidation since September 2nd. It is attempting a trend reversal. If I take you off of the daily chart and drop you down to a 15-minute, you'll notice this leading contracting diagonal, 3 waves lower. We're trying to move higher. Alternatively, given the fact that the retracements that follow diagonals are typically 60 to 78.6% retracements, this could simply be an ongoing 2nd wave, but this is a chart that I want to keep focused on. That's it for me, Todd. Back over to you, sir.
Nice work. Nice work indeed. Yeah, we're going to look at, I'm going to wait till the market opens in 20 minutes to take you through that option hedge based on the 2 wave interpretations that Bennett just put forward. Looking at the sometimes Thinkorswim, which is the option platform that I use, will populate option quotes ahead of time, sometimes before the market open, and sometimes it won't. So I'm getting all 0 prices. So I'm going to wait till the market opens, and we will and we'll set up that option trade. Here's a question for you guys that I have, and it's funny. I was talking to an old a friend and colleague of mine from a long time ago, and we're just trying to interpret the what you're into in terms of trading. What I mean by that is, there was a huge option boom in this trading, the retail trading world, which we are all a part of. 10 years ago, and it seems like it's shifting more towards stock only. What are your interests, both live viewers and people watching the recording? If you're a live viewer, maybe type in on the chat there, and if you're watching in the comments below, are you more like, what percent are you trading just of stocks, and what percent of the time are you trading, say, options? Let me know. It's either dollar volume, percentages, or time spent, or what are you just more interested in? I feel like people are becoming less and less interested in the stock side, and I think it's a function of the market. I think, one, I do believe we are in a tech boom right now. So it's almost like the tech stocks of the 90s are like the feeling is back. Not the head over heels, people getting insanely rich, but just, this next evolution in technology and the way it impacts our lives. I also think you have guys like Portnoy and all the others. You look at all the YouTube channels. We've been around for a decade, but all of a sudden there's a whole bunch of upstart stock only YouTube channels, which I think there's a lot of people who are quote unquote working at home. There's 20 and 30-year-olds who have discretionary income and are trading the stock market. But let me know where you are. Are you a newer investor interested in stocks, options? I'm just curious where you are. Personally, I'm doing a lot more stock only, and plus with the market just going straight up like that, it's easier to make money just on the long side holding stock rather than dealing with the decay of options. If you're more advanced and you're doing butterflies, which is minimizing your theta or your decay, then that's certainly one way to get around. But let me know what your thoughts are on that. Okay, let's go over to Terry. Really interested. I think he's going to cover communications, which is a really key sector that's showing a lot of relative strength. Terry Long in Sector Spin right now.
Hello, traders. I'm Terry Long at tradinganalysis.com, wishing everyone a happy St. Paddy's Day today. Let's start here with last week's performance of the index. The markets rallied back in a strong fashion last week. The S&P hit a new intraday high on Thursday, closed up about 2.64% for the week. The Nasdaq also rallied strong, but it still remains well below its all-time highs. It rallied 2.1% on the week. Looking over here at the performance of the performance charts for the past week, the consumer discretionary was the star sector last week. It rose 6.3%, followed closely by real estate, utilities, materials, and industrials, and even financials outperformed the S&P. Staples, technology, communications, healthcare, and energy rounded out the bottom. Even the worst performing sectors still managed a 1.17% gain last week. Now fast forward here to Monday and Tuesday's price action. We can see the S&P is up about 0.5% this week, but the Nasdaq is up 3 times what the S&P is. Nasdaq's up 1.6% here. Semiconductors rebounded sharply also this week. They're not shown here on this chart, but they're up about 3.3% in the past 2 days, which I think has helped push the technology sector back up to the top of our list, rising 1.8% so far this week. Communication sector continues to rise as well, but our leading sectors, energy and financials, are starting the week off in a decline, with energy down nearly 4% already. All right, let's switch over here to our weekly relative rotation chart. Our leading sectors remain energy, financials, communications, materials, industrials, and technology. basically at par here with the S&P, and discretionary just slightly below the S&P, technically now in the lagging quadrant. The industrial sector, let's zoom in a little bit here. I want to highlight that. That's this one down here in the bottom. Has formed a clear hook just a couple of weeks ago. I showed you this. I showed you this hook in formation here. And now it is continuing to see rising momentum in the industrial sector. So, and it's technically industrials. I saw it, it's just edged up, right? So it's exactly right on 100, but it's going to be pushing itself back up here, certainly back up into the weakening, if not in the leading quadrant very soon. Now, both energy and financials continue to gain relative strength against the benchmark, as indicated by these vectors. But if you look at the effects of Monday and Tuesday's price action on the tips of these vectors, you'll start to see the rollover occurring in these two, which is going to indicate a declining momentum. Excuse me, got an itchy nose. The technology sector continues to see further weakening as it follows consumer discretionary down below. But communication sector continues to push further up here into the leading quadrant. And actually, last week's velocity slowed a little bit from the prior week, but Monday and Tuesday, it looks like we've got a re-acceleration going on here in the communications group. Now, the materials sector is continuing to wander around a bit. So this one right here, the XLB, has kind of yo-yoed, and then it started a big push to the north, and Monday and Tuesday, well, now it's back to yo-yoing again. But the northerly direction indicated a rising momentum, but now that we're switching back, it looks like a rapid and sudden reversal happening there. Now, the real estate sector, you can see over here in the improving quadrant, it rose about 6% last week. It now sports a northeasterly heading as it rises further up, and it actually looks like it's got an accelerating tail here. Staples and utilities, they remain in the lagging quadrant. The utility sector did see a surge last week also, rising about 4.5%, but it's just heading to the north right now. I really want to see more of a turn to the east. The relative strength ratio on it is still underperforming. And the healthcare sector, of course, healthcare sector remains in its underperforming mode. You can see the tail actually starting to grow now, and healthcare actually pointing to the southwest, indicating that more declining relative strength as well as momentum will push it down here into the lagging quadrant. Now, because material sector confirmed a hook back to the north after a few weeks of wagging back and forth, I thought I would give you a deeper look into the composition of that sector. Now, many leading stocks in this sector are seeing rising momentum. This week, though, that very last Monday and Tuesday's price action is turning all of this. So if we look at what we've got here in this industry group, I'm going to open the materials industry subgroup here. It's divided into about 9 different industry subgroups here. Oh, let's go ahead and open the RRG chart. Unpin that. There we go. So this is the RRG of the industry groups in the materials sector. And what I'm seeing here is that there are 2 groups in the leading quadrant. There's 3 down here in the weakening quadrant, and 2 over here in the lagging quadrant with an improving trend going on in commodity chemicals, and already 1, the gold miners, up here in the improving quadrant here. This one here is the non-ferrous metals, and you can see it's got a declining momentum. This is the aluminum index. We don't look at this one very often, but the aluminum index is rising back up here out of this weakening quadrant. It's got a very strong relative strength, and now with rising momentum, there could be some interest here. Up here in the leading quadrant, we've got paper and iron and steel indexes up in the leading quadrant. You know, but what's really missing here is much of an easterly heading. I'd like to see the steel group start to push a little bit further east. It's got a slight northeasterly slope to it. And the paper index looks like it's a bit of a chop going on here in it, but it's holding a good position in strength. So let's jump over here, take a quick look at what's contained in the aluminum index. And let me get my notes scrolled up here. I'm kind of running out of order, but that's okay. So what we have here in the aluminum index, let's take a look at these stocks. We've got Century Aluminum. We'll sort these by relative strength ratio. Century Aluminum, Aluminum Corporation of China, Kaiser Aluminum, Alcoa. Everybody should know Alcoa. That's the one with the largest market cap. And Constellium. If you'll notice, all of these aluminum producers are essentially running very strong relative strength indexes over here between 115 and 120 here on the index. Most of them are posting northerly vectors here. We do have a couple in the downtrend, but Alcoa and these other two are looking good to me. I'm going to switch over here to the gold miners. First I'm going to show you my gold chart. Now gold actually found some support and bounced off of the 1680 levels that we targeted, but there's no clear completion of this long consolidation period as yet. We're keeping a close eye on this. I think the gold miners are possibly staged to begin a rally if we get gold to lift off. But again, they're just kind of wandering around over here in the lagging and improving quadrants, and they really haven't started making a solid push back to the right. Now, there are some other commodities besides gold that are doing quite well. I already discussed the aluminum. And so let's take a look at the iron and steel group here. This group is a lot larger list. Excuse me. Pin that. And you can see we've got this already sorted. There we go. So here's your list of iron and steel producers. Currently, every single stock in this group has a relative strength greater than 100, meaning that it is outperforming the benchmark. About half are in the leading quadrant, the other half are in the weakening quadrant, and there is some internal rotation going on inside this group. Some stocks are seen with declining momentum, while others are seen with rising momentum. And those with rising momentum are positioning themselves for a return back here into the leading quadrant or a push even higher up here into this leading quadrant. Now, I'm going to let you guys explore the possibilities here, as we don't have enough time today to evaluate each and every one. Hopefully, I've given you some insight into how and where to look for new and current leading stocks. Remember, technology is not the only sector we can play. So spring arrives officially Saturday, and we know that spring brings many changes with it. It looks like the stock market is no exception. Have a great week, everyone. Back to you, Todd.
Thanks, Terry. Holy cow, I can't believe it's spring. Amazing. All right. Yeah, good stuff there. So rotation is the lifeblood. And I'm chatting back and forth here with Paul. He's saying usually in the streets all day having parades and then a few scoops after. I got to plead ignorance. I didn't know scoops are drinks. I've got a case of Guinness upstairs. I might have to go get one, but not this early. Hey, let's skip the commercials here. Been Bennett, we don't need any sponsor funding. We're good. We're self-funded. Just kidding, because we're all our own commercials anyways. Let's bring in Alex. Is Alex ready to go and kind of get us updated? Give us a quick word on the macro, Alex, quick, and then hit Bitcoin if you don't mind. And then after the bell, we'll look into the index hedge. Also, I just tweeted out, did a little St. Patrick's Day video with the kids, and the chart that Bennett was just showing there, possible B wave. So we'll hit that on the other side. Let's bring in Alex.
Hey, welcome guys to a little bit of a macro overview, thought to give you a good intro. So I will just lean on what Todd have said already. I'm going to show you first something which we are looking with our members for so long. For now, this is the price chart on the German 10-year Bund. And as I said the last time, we are seeing now this trend line, and according to our wave count, we might be in some type of a fourth wave, which is kind of signaling a potential disinflationary rise also in Europe, although I think Mme Lagarde was much more concerned than the Powell was, although she reiterated on the last ECB meeting that she thinks also this is transitory, but they have increased the bond buying, and she said they're going to do according to the needs. But if we start to break furthermore here, I think we will finally kick off in this fourth wave. I think will take some time if you look how long the second wave was. So we are still continuing to follow the news on this European and US markets yield front. I'm going to show you dollar index, which is still very unclear. If you look here, you can see that we are still not breaking on the upside, which is a little bit concerned. We also have a wave count which shows this as a fourth wave and one more move down to 88%. So I think Fed today will finally set the stage potentially for this either a breakout on a dollar in this corrective pullback that we expect, or maybe we're going to continue lower and break these crucial levels, which will signal us that actually Powell will say something and the yields will start to retrace or move lower. So I think today it will be a key day to have a little bit more solid view. For now, looking for this wave count, I'm going to stay pretty much neutral until I see a break of key levels in dollar index. So let me show you quickly also a gold and a Bitcoin. Let me show you first Bitcoin, and listen guys, I know there is a many craze about the Bitcoin currently, but look at this chart. It is very simple when you just isolate the last move and you do a simple fee projection for the wave 3 target. We have usually three fee projections. First one is 100%, which is a measured move inequality. We are obviously past that. We already passed the second one, 161.8, which is the usual target for the wave 3. So we are left with this 200 and 2618. Do you really think, guys, that we can add another 1.5 trillion in the next couple of months and go directly to this 185, 70,000 mark on this 2618? I don't think so. I think we are going to go in a lesser degree fourth wave. Then we're going to revisit this higher degree 200, because these 200 levels are for the lesser and higher degree. And if you can see here, I will show you on a smaller time frame, we backed off exactly around this lesser degree 200% projection for the lesser degree wave 3. Higher degree wave 3 comes around 75,000, which options on a Bitcoin are actually pricing in until September, and I completely agree. This very much aligns with our wave count, so check this out as well. We are trading on the upside in all technical analysis as a three mean sisters, and we have a very big divergence in the RSI already from here. So I'm going to go with, again, I'm going to oppose any bullish stance on a Bitcoin. I think we finally going to set up in this fourth wave correction, and then we will move to my final target for this green wave 3 around 76,000. And as you can see, we are also trading very nicely on this trend line. So there is several key factors I'm looking here. So there is a trend line, RSI diverges, 200% projection, and a really plausible wave count in a lesser degree, 5 waves on the upside. There is already 5 waves down on a smaller time frame. If you look at it from these 200 levels, which I already show you on the lesser degree. So I'm waiting this pullback, and I'm going to put the small shorts with the stops above here, anticipating possible wave 3, 4, and 5 for the wave A on the downside. If you also look the guideline of alternation, the second wave was complex, so this one can be directional, and the first support is around 32 to 34,000. Maybe we can get even a triangle, but then in that case, 40 to 43,000 will be the support. So I'm still gonna be a contrarian on this front, and I'm going to say that probably we are going to go lower, because the key points we always look for a possible reversal are a little bit sounding a kind of a warning sign now, as you can see, all of which I have already told you in the past minute. I'm going to show you just gold, and then I will finish. Let me just look the gold chart. The gold is actually reached our support level, our key support level. I think potentially we are not done yet. We have reached our projected target for this complex, or you can count it even a simple correction, down to 1,670. But I also have a few wave counts, depends on the yields, and something which I will prepare for the next time this is a longer term wave count of dollar yen, which is inversely correlated with gold, and this starts to pair up, although we had months of a divergence, but now they start to kind of align again. So even this big triangle, if you look the time frame on the monthly, which I don't have here, I will prepare it for the next time, we might be even in a large triangle. So I'm keeping myself open. I think today with the Fed, lots of things will be more clear. If the yields are gonna be kind of a neutral stance from Fed today, like a kind of a Powell stance that this is transitory, I think that the gold might even take another dive and continue lower. So I think today will be a key day. Many support levels could be broken, and dollar can start potentially to continue higher, which will be also positive for dollar yen, positive for dollar, and negative for gold on a, let's say, few months basis down the line. So very quick for me. So thank you, Todd. I sometimes sound that I'm very, very fast, but we don't have much time. So back to you, Todd.
That's why you have your own show, Alex, tomorrow, 9 a.m. I feel like everyone here, I still think this show is going to evolve. Let me know what you think. I think we're trying to fit too much in the short period of time, trying to be respectful of your time, on a Wednesday morning. And I know it's tough before the market opens. So yeah, I think everyone here on the T18 needs their own show. As promised, I got the Guinness here ready to go. I think we'll hold off on that until Fed time, see what Jerome Powell has for us. I did want to show you sort of maybe I will even execute some of this live, the hedge in the Nasdaq. So let me just take the screen share, boom. Okay. So based on what we're tracking here in the indexes, and I just threw this tweet out. I'll just show you the live chart, in fact. So Bennett, is your mic hot right now?
Yeah, I can enable it.
What are you leaning towards, blue or red? What give me odds between blue and red. So blue in the Nasdaq gives us a C wave sell-off. that completes a larger 2. No, excuse me, that's the red count. And then the blue count is a larger correction is done. We're going up in 1, down in 2, just down to this 12.8, 12.6. What make me a market on these 2 counts?
I'm going to be a little more conservative and lean towards the blue count, unless we have a good reason to go against it this afternoon.
Okay. All right. So, and this is where, you know, the subjectivity of Elliott is awesome. It's not formulaic, and so few people can understand that. We worked with Elliott Wave International for a long time. I'm dear friends with them. You know, we were selected as one of the only companies in 40 years to trade live capital for Elliott Wave International and their clients. But I hate teaching Elliott Wave. I got to be honest with you. My team knows I feel that way. People want formulaic, they want easy, they want A plus B equals C. And that's just not the way markets trade. That's not the way life unfolds. That's not how the future telling business goes. So, you know, when we have 2 wave counts that say, well, basically we could go down to the 12.8 to 12.6 level, or we could go down below 12.6 to 12.8 down to the 12,000 level. I say good. You know, I like that because, one, we can take it a step at a time. You know, we could put a larger hedge on based on this. And if we were to put a larger hedge based on that prior count, but we were only moved down to the 12.8, 12.6, we'd still make a little bit of money on there, most likely, if not break even. Okay, so I want to kind of put a little hedge on to say, all right, let's just take it from this zone down and just try to cover our basis in this zone right here. If we start to break 786, which is key, which is going to be the point where, you know, if we start to break 12.4, then you really start to quickly push over to this and say 12.4 brings you down to 11.8. So you kind of take it incrementally, all right? So the first thing we could do is, if we were just to work on something to say, let's get down into the 50 to 61%. Let's do like a 12.8, 12.6 put spread. All right. So let's get down here. I'd like to go out. This wouldn't take very long. We'd probably need to go out towards the probably less than let's go those 29 marches. We don't need to get much time there. Right there, 29 March. So if we were to do like a 12.6, 12.4 put spread. Come on, baby. Let me go back here. So 12, let's get down. I like to get a little bit out of the money, like a 12, 12.9, 12.6. Where's my 12.9s? 12.9 and 12.6. Okay. So I just want to do a quick comparison here, guys. So you buy the 12.9, sell the 12.6. That's $89. So it's $8,900 per spread. All right. So let's just go like this. Analyze trade. I'm going to delete this one. Okay. So what that means is your max loss would be the debit you pay, which is $9,100. Your break even, which is blue at expiration, would be the long strike minus premium paid. So it's 12,900 minus 91, which gives you 12,807, give or take. And then this would be your max profit down to here, which is $20,890. So that's fine. You could do that. It's kind of a big trade. All right. Another way you could do this is if you were to butterfly it off. So what that means is buy the 12.9s, sell the 12.6, sell another 12.6, and then buy something lower. And I'll show you what impact it has on the cost, as well as the Greeks. So if we go out to 29 March, I'm going to do a 12.6 put butterfly. So I'm going to scroll down, puts on the right, calls on the left. Right click, buy butterfly. So we're doing 12.6. We'll do 12.9 up top. 12.9. And then if you were to make it even, okay, so there's 300 points above, and if we're to do 300 points below, we go 12.3, and then I'll adjust something here to make this point. So let's see now. All of a sudden, if we look at this one costs $35. It's roughly a third of what the debit spread is. Okay, roughly a third. So comparing the two, okay, this one, the debit costs 91. Okay, we have 160 positive theta, and we're short negative 48 Vega. Okay, you're short volatility. I don't love being short volatility, right? If the indexes are expected to drop, because volatility would go up. So way you could do that, kind of minimize, actually put more positive theta. Now you have 190 theta compared to 165. But what you're really doing is you're flattening your Vega from minus 48. Actually, so wow, actually that's even, that doesn't look right. I have to check that one. I don't know how a butterfly would be more negative Vega, but that's okay. But the thing is though, if you look at this, it's costing $32, so $3,300 max loss to potentially make 25,000 compared to the spread, which is going to be 9,000 risk compared to the same possible reward. And if you scale it right here, you know, getting down, it's going to be kind of hard to break right through 12, this 12.6, 12.5 area without any kind of bounce. And the same thing, and if we have a 5-wave move down here and see on the way down to 11.8, it's not going to be a straight one-way move. It's going to be like this, down in 1, bounce up in 2. So if you kind of factor that in, it really makes sense, I think, to do this one, because then you can do 3 times the amount with the same amount of risk. So this time we could do 3 butterflies. I'm still risking $8,700, but if we could pin down into, oh, sorry, let me do this. We're risking, so $90, $94, $9,500 possible risk. But if we were to pin down into 12.6, then all of a sudden you make $77,000, right? A much bigger reward. Okay. So that's kind of what I want to do. And then if we get down there, then we can, maybe we can manage. And if we don't hold, then we can extend and do a deeper fly. So I'm going to put just 2 on to start. I'm going to put it here. So I'll have $6,000 of risk on that to potentially make 52. And if we get down to that other red count, as I said here, we'll put another fly on. So I'll go ahead and execute that. We're going to send this out to our members as well. Confirm and send. And okay. And then what I do, guys, when I put an option trade on, I put it on, and then usually the market makers will move the bid-ask spread. So I'll go and cancel replace. So I've got a bid in at 31.65. See, the mid price is down 32.5. So just kick it up to, I'll go down to like, oh, see, it's moving up. It's moving all over the place. I'll put a 34 bid in. And I'm just kind of watching it move around. Let me go 32.5. Let's see if I can get anything filled. And of course, the market's just open, so the market makers are busy. So you don't want to get too crazy. Mid price is floating around, and they're just filled at 32.50. Okay, so just a little index hedge there. And again, I don't want to get out of my tech positions. It's hard to get back in, as I mentioned. It's much easier to spend $6,000 and try to protect, you know, a pretty significant amount of a drawdown rather than trying to get in and get out, which is really hard to do. So guys, let's bring back the TA team. Closing thoughts, guys. And again, please, if you don't mind, let the Google algorithm know that you appreciate the work. And I had another thing maybe I'll save for a free video, but we did CNBC yesterday, and I did a pitch on Garmin. This is sort of off topic, but really like what Garmin is doing. It's a great value, 2% yield, starting to gain, I think, a little of their businesses are kind of firing because they're coming into the summer season with outdoor sports. They're doing really well in the wearables. They have a new golf lineup. Boats, you look at some boat stocks and RVs, recreational vehicles, those stocks are going crazy. Take a look at Malibu boats. Take a look at Thor. These SUVs, Shift Company, which I've mentioned before, they make the chassis for RVs. That stock is ripping. That's in our portfolio. Check Garmin out. And again, what do you guys think? I've wanted to get an Apple Watch. I'd like to know what the TA team says, but I like the sleep metrics on the Garmin. This thing you only have to charge once a week, where the Apple Watch, I watched my wife, you have to do it every night. So you got to charge it while you're sleeping, then you miss the sleep data. So check out Garmin, 2% yielder. It's breaking up through 125. That was the pre-2008 high. I really like this stock. And I think, again, in this active lifestyle, which we've adopted, which I don't think is going away. I think people are getting out there and doing more sports that aren't right on top of each other like we were in the past. I think it's changed forever. So watch that stock. I was going to do that pitch, but I'll do it another time. All right, guys, what do you think? You guys, Apple Watch, Garmin, Bennett, you're an amazing tech dude. What do you have a preference there?
I love Garmin. I love Garmin products. Obviously, I use their aviation stuff.
As a pilot.
Yeah.
As a pilot.
Great hardware. So I don't think you could go wrong either way.
How's the airplane market doing? Is everyone buying airplanes now?
Oh gosh, that's actually a pretty volatile market. You'd be surprised.
Oh, I wouldn't. A lot of ups and downs.
Yeah, absolutely. A friend of mine, he sold his 170.
That was a horrible joke you should have got.
Yeah, I got it. I just didn't go there.
Isn't that bad?
No. He sold his 172 for like 35 grand one year. It was like a 1982. It had quite a few hours on it. And then 8 months later, that same 172 would have sold for about 75. So it's
wow,
it's quite the swing.
Oh my God.
Yeah.
We should do a little private equity deal. I have a neighbor who owns there's a Freedom Boat Clubs. They're a franchise around the country, and like you can go rent. You pay $6 or $8 grand, or whatever, for the summer, and you can have 4 rolling reservations on a boat. We're close to Lake George, which is like one of the top 10 most. What is all that noise? You could have 4 rolling reservations. He's saying they are completely booked out. He's like, I can't even handle all the demand. And again, you look at all the boat stocks. People are buying boats and outdoor life and hiking and I think the mass exodus out of the cities just continues. And watch that Garmin stock. Let me know in the comments, guys. What are you wearing on your watch, on your wrist? Are you an Apple? You're a Garmin or something else? Guys, closing comments. I'll leave it to you.
Takes the licking and
Please throw a
keeps on
thumbs up
ticking.
window, please. Go ahead.
Recreational products, guys. You check out my sector spin last week. I talked about the consumer discretionary industry group, recreational products, recreational services. Those are things that are in the leading quadrant, and they're moving higher. A lot of those stocks that you mentioned, Todd, are up in that group there. So we're right on top of all that.
The best 2 days the best 2 days in a boat owner's life: the day you buy it and the day you sell it.
And the day you sell it, yeah. Absolutely.
We had a Malibu growing up. Great boats.
Really?
Yeah.
Oh man.
Good times.
All right, guys. Hey, thanks for spending time with us. Again, throw a thumbs up if you don't mind in that YouTube window. And Alex, everything okay over there, bud?
Yeah, my dog is just molesting me here. He wants to go out. Just one quick. Bella, check it.
You
right.
know what?
Yeah.
Wait.
Wait.
Open again.
Wait. Listen,
No, I'm not. I got too much work.
Listen, this is just peanut, guys. Happy. Did you see what's going on?
Oh God.
Did you see what's going on NFT crypto art markets? The last
It's insane.
It sold for $69 million by Christie a week ago. So now Elon Musk is selling a jingle which is 2 minutes. It's already bid above 1 million.
Yep.
One of our members bought one for 3,000 2 months ago. It sold it for, I will not say, but over 300K.
Wow.
I mean, I don't know if I'm in a wrong place, but wow, what's going on, guys?
The NFTs
this is
are
so crazy. So crazy.
Unbelievable.
I mean,
Unbelievable.
Unbelievable.
Mike Novogratz has got. God, I'd love to get him on the show. Mike Novogratz has quickly gotten behind it, and I've been consuming a lot of his content in terms of understanding exactly how NFTs work and what their place is. But I mean, listen, it's digital art, digital property is hard to own, hard to contain, and I think that a digital piece of art, which probably will be our future, will go on the blockchain, right? As far as I understand correctly, and if you own it, then it's much easier to track its value and depreciation, and contain the piracy, right? Do I have the idea right?
Yeah, you have the idea right, but you will expect that the speed of a price and acceleration of that will be kind of slower in the beginning, but this one is going like a rocket. It's not like the industry is going to kind of build itself for years. It's already, you see some prices which are amazing. So it's already kind of starts with the boom.
Are you surprised?
Yeah, I am
with
surprised.
That, I mean, why? Because I mean, we are. If it's going right on top of the blockchain, and wait, what is it built on? One of the networks that we know? Is it built on Ethereum, or what network is it built on?
Yeah, it's built on Ethereum.
I mean, I'm not surprised at all. We're already used to the idea of blockchain. We've been told for years that blockchain is going to change the way so many different businesses and industries exist. I'm not surprised at all. I mean, it's a natural extension from crypto. We just got to first understand what the hell it means.
So that's true, but 70 million for the artwork, I mean, for my taste, it's a bit too much for the beginning of the industry. And secondly, today, India, listen, just this information, India banned is all the crypto trading, and even you will not be able to hold a wallet. It's going to be punishable by the law. Whole India.
They'll find a way around that.
Yeah, they will find a way. But I'm just saying, I'm just plugging this up. I'm just saying, for my taste, it's a little bit of too much price of extension for the beginning of something like that. That's all. I'm just amazed by the $70 million mark. It's amazing.
Got it. Yeah, for sure. All right. Terry, Bennett, closing comments, guys? We got to.
Yeah,
that's it.
That's a wrap.
More on that from Alex tomorrow in his crypto lab.
That's right. 9 a.m. Eastern on
9 a.m. on the trading analysis. Oh, wait a minute. Speaking of Bennett, did you let your YouTube vlog fly yet?
I haven't. I'm going to do that here in a minute.
Okay. Well, head over YouTube. Bennett did an awesome vlog, video log on how he built this awesome, unbelievable computer, which I don't deserve. I really appreciate it. So if you're into computer PC building and you know all about CPUs and GPUs and motherboards and clocking and overclocking and all that, go check out. It's going to be on the Trade Analysis channel, and I'll probably post something today on this channel as well. Just get that video out there. He did a really nice job. So Bennett, thanks for putting that together, man. It's going to be I'm going to use it for a lot more live streams, a lot more projects, and thank you.
Yeah, absolutely, man.
He maybe is going to get several more orders. That's for sure.
If I can find the hardware. All right. We got to get out of here.
All right. We got to wrap it.
All right. We'll see you, members. We'll see you guys in 7 minutes.
That's right. All right. See you guys next week, YouTube. Cheers.